Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York on Friday. Happy Aloha Friday, as we say on the islands, 24th day of April 2015, and this is the daily report for gold and silver, our weekend review, and what a week we've seen. Pretty much stagnant until a fall from grace today, with the precious metals across the board trading lower. Gold down about $15 on the day. We've got roughly 1 hour left in the trading week, so we believe it's going to close somewhere in this area. 1179.14, that's the current print on the screen. Low 74.90, high 95.50. Silver also continuing to trade lower, although in terms of percentage drawdowns today, gold is absolutely in the lead, down 1.24%, as opposed to silver down 0.88%, or 14 cents lower on the day. The low 15.56, the high 15.86. We'll touch on silver in a little bit. So as we close in on the week, we've had a most interesting week, and the real question is how to dissect this latest trade activity of this market coming down roughly $15 on the day. As you know, we have been looking at some key levels. I've taken out the 92. That was our 38% retracement level. This retracement is a very, very short-term retracement, simply looking at the rise from 1142 up to 1223. We talked about the fact that if it broke through this level 82, that would probably signal lower pricing. In fact, midweek, I put out a recommendation that if it breaks 82, you can go ahead and get short, putting your stop above 82. For those that took that call, we're not making an official call here, but for those that took that call, I will work with stops as we trail down. On an official note, we will probably be getting short first part of next week. Now, when we look at this particular market itself, when we look at this drawdown, the drawdown around $15, this absolutely was not a matter of a strong or weak dollar. In fact, a weak US dollar today actually gained about $4.50 in terms of the price of gold. Selling accounted for $19.20, and that's where we're getting our $15. In other words, the selling was actually greater than what we're looking at. A weak dollar actually kind of propped it up a little bit, roughly 25%. We could have had a $20 decline on the day. So as we look at the marketplace itself and the way that we're looking at the close, of course, as I said, this 82 was and is a pretty critical area. The reason I believe it to be such a critical area is that we can see on a number of occasions the marketplace testing these lows and then popping back up. On this occasion, actually making a higher high than the previous high, although not by much, and more importantly, not sustained. Even though these are up days, they closed well off of the highs of the day. At that point, we really went into this kind of congestion area, and that's what was really prevalent over this week, is that we were really range locked as we go into next week. FOMC meeting coming up, and a lot of uncertainty there, although my sense is they're not going to shake the ship, so to speak. And even if they announce any kind of rate hikes, realize that traders, any kind of rate hikes, once they are implemented, and it's a matter of when, not if, but once they're implemented, I think are going to be very, very slow. And most importantly, I think that the Fed, even when they do begin to tighten credit, will do it in an accommodative manner as to not shake the market up, and to do it very, very slowly. We're sitting with these interest rates, I believe in Europe, they're negative. So the actual interest rates at some point need to be raised, will be raised. And the question is, will it be orderly and will it be accommodative? I believe that will be the case. In fact, it will be accommodative. So beginning of the week, what do we want to look at? Well, are we going to see follow-through selling? Because you can see these lows here at 73. And the lows at 73 absolutely match up with the 61% retracement. So we have broken through 82, and to me, that was a critical area. I explained why I think it's critical. We just had this real series of bottoms here that we couldn't see the market break below. That being said, we are going to close below 82. There's no doubt about that. We're at 79 with maybe a half hour left in trading, so I'm imagining that we're going to close in this area. And really what I'm looking for next week then is going to be some follow-through selling. I think that this market now is on a fairly defined downtrend, and we talked about some various targets that we have. The first target, of course, is really pretty much the low that we hit today. We talked about this yesterday and the day before. It's based upon these levels right in here. And once these levels, I should say if, but I believe they will be breached, but once these, or if these are breached, where there's really only a couple of places that the market really needs to go and almost has to go. We've got this low here at 1142, and then we have what I'm calling the all-time low. It's not the all-time low, but it is the lowest low gold has traded at since the market ran to 1420. Excuse me, 1920. So with that in mind, you've got these two target areas at 30 and at 40, and we closed just above the 61% retracement, but we did touch at that. So as it blows through this, these are the points I'm looking for it to go. If you recall from earlier this week, this was my first initial target, and I said that the market should have no trouble reaching this target. We, in fact, have come real close. No cigar on it today, but I believe we're going to hit this, and I believe that ultimately we could go and test not only this low at 40, we've seen the market trade to this point before right in here, but I believe that we might retest this low and even make a lower low. If that happens, then all kinds of conjecture will come out to the market about $1,000. Our original call on this particular market was 1080. That's where I believe it ultimately could go to. It's a matter of how it will get there, what kind of rallies we'll get, what kind of corrections we'll get in the market. So traders, some other numbers we might want to consider to look at as the market begins to trade next week. To do that, I've pulled up one of my shorter term charts. In my younger days, I used to work with 3-minute and 7-minute, 13-minute charts. Now to me, a short-term chart is 180 minutes. I guess as you get older, we get either wiser or more patient. But in either case, 1171, that's a key number, and you can see that that's this bottom here, and that's really more of a confirmation of the last chart that we looked at, and it really becomes apparent when we look at this chart where these lows sit in proportion to where the market's been. You can see that there's almost this unspoken support level at this level. You have this one aberration right here in which you dip, but pretty much it stayed the course, pop back up, pop below it, but pretty much stayed the course. So this is the next area we want to look at. And as I said, if and when it takes out 71, it will, I believe, make a play for originally this 40 area here, and then finally this 30 area. If that does unfold, once it breaks through this, we'll give a more updated assessment to where we think gold prices could go to. And traders, lastly, I do want to take a look at silver. Silver, unlike gold this week, which was trading really in almost a flat line, meaning the entire opening range, open to close on a daily basis, was really not making a lower low, wasn't making a higher high. It was trading sideways. Silver hasn't been that way. In fact, what we've seen with silver has been a dramatic decline in price. Our first target right here has effectively been hit. And we want to really see how it reacts through this area here, because if it breaks below, because my target right now is about 1525, 1510 to 1525, and if it breaks through 1525, you really don't have any lows below that, if you take a look right here, for quite some time. And traders, I've gone ahead and converted this chart to a weekly chart so that you could really see in terms of time. We'll move this up to this point. The market really hasn't traded below this point. You really have to go back substantially in terms of time before you see silver trading at this price. The other thing that really sticks out when we look at silver is this dramatic amount of support that's been sitting at around 15 has really only been breached this one time. And that was really an aberration. I believe that happened right following the Thanksgiving Day extended weekend, and we saw this market really spike down there. But besides that, you can see we have no historical data in that price point. So we're going to have to actually go back below and past 2011, 2010, 2009 to actually look to see how it reacted below this point. So we will update, of course, our forecast on that should we breach those points. This has been Gary Wagner wishing you as always good trading. Have a great weekend. We'll talk to you on Monday for another daily update review. Bye-bye.